The broadcast is now starting. All attendees are in listen-only mode.
Okay, guys, how everybody's doing? Happy Wednesday. This is Neil Green again with you on the weekly webinar. This time talking about the event that's going to take place this coming Friday. As you probably know or not, we're talking about the NFP, second biggest event in the market after the rate decision. And well, it's the biggest mirror to the US economy situation. And very volatile event. Okay, can create a lot of trading opportunities. We're going to talk about exactly how to read the market during this event. I just want to do a technical check. First of all, welcome you guys on GoToWebinar. Okay, you guys joining us. Can you hear my voice, see my screen? Okay, you have a chat window, so if you have any question during the webinar, you're more than welcome to write me down. All right, I'm going to leave some time, of course, for questions at the end of the webinar. Just want to see if you guys on Facebook joining us. Can you hear me? All right. We good? Can we start? Okay. So, by the way, you guys on Facebook, if you want to join us next time, very easy. All you have to do is just go here. This is our homepage, as you can see, iTrader.com. Okay, and just click on Save Me a Seat. All right. Put in your first name, last name, and email address so we can contact you back. And of course, it's for free. You can register to the webinar and ask some questions through gotowebinar.com, so it'll be much easier for you. All right, guys, let's talk markets. Let's talk markets. Let's talk money. Okay. All right, NFP. We said trading the NFP this coming Friday. Now, the non-farm payroll. Okay, NFP stands for non-farm payroll. It actually measures the number of new payrolls from the last. Okay, first of all, the NFP takes place every first Friday of the month. All right. This coming Friday is going to be the first. We're talking about 2 days from now, right? It's Wednesday. On August 4th, it's going to be the first Friday of August, which means we have the NFP every first Friday of the month. Okay. At exactly the same hour every time, every month. It's a monthly event. Okay. On Friday at 12:30 GMT time. All right. So make sure you know what time it is at your local time. Okay, check if it's 1:30 or 2:30 or whatever. The non-farm payroll actually measures the number of new payrolls except for the farming from the prior month until this month. Now, the NFP is considered the biggest monthly event. Okay, in the market, you're gonna see the effect of the event on the market. We're gonna talk about it today. I'm gonna show you some previous NFPs and how it affected the market. The job report, which is the NFP, reflects the conditions of the employment situation in the United States. So it actually gives us a real mirror to what's going on in the US. Okay, it's the number one event that affects the Fed on whether to raise interest rate in the States or lower rate or leave it the same way. Um, a lot of information coming in. Today I'm going to teach you exactly how to read this information, okay, in order for you to take advantage of it. Now, the market reaction, as I said, is expected to be huge. Now, three main numbers are published, okay? Number of new jobs created the previous month, which means from last NFP till this NFP, unemployment rate, and average hourly earnings, okay? Now, traders need to take into consideration all three numbers, and this is important. Let me tell you why. A lot of people that are trading the NFP, okay, the only thing that they do, let me show you here. This is the, let's go to Forex Factory or investing.com, whatever is good for you. This coming Friday, you see USD painted in red, which means high volatility expected, high impact expected, all right? We have these three, you see, average hourly earnings, all at the same hour. 12:30 GMT. It's not a GMT time here, so just set the clock. Okay. Average hourly earnings. It's a monthly. You see, monthly event. Non-farm payroll and unemployment rate. Now, a lot of people that are trading the NFP, I would call it the amateur traders. What you don't want to be. Okay, I'm going to teach you right here how to look at this at the NFP professionally. The only thing that they look at is the NFP itself, which means they say, you see, for example, we have 181,000 new jobs, new payrolls expected. If the actual number here on Friday, 12:30 GMT time, is going to be higher than that, okay, they say it's good for the dollar and so on and so on, and if it's lower, it's bad. That's it. But, you know, we want to take a look at the whole picture, not only on one thing, not only on the NFP itself, but all three major numbers, which, as we said, is the NFP itself, non-farm employment change, average hourly earnings. Okay, we want to know how much people, okay, how much money, I'm sorry, the Americans are, the salaries, did it go up or did it go down, or how much did it increase? So we expect 0.3% of increase. Of course, higher than that it's good, lower than that is less good. And unemployment rate, which is expected to be lower. Right now it's 4.4%, and we expect unemployment to go down, which is good, to 4.3%. All right. Just in general, for you to know, 4.3%, it means that less than 5% out of the Americans that can work, right, are not working, are unemployed. We're not talking about old people or babies. We're talking about people that are part of that can work. And as you can see, more than 95% out of the Americans are employed. For me, it's full capacity, full employment, which is great, great thing. Okay, it's a great thing. We expect 181,000 new jobs, we see, and we expect increase in the average hourly earnings by 0.3%. Okay, take all these three numbers into consideration. Okay, write it down and check it. Okay, back to the PowerPoint. Let's see what else we have today. Okay, what else we have to look at. So the dollar right now, let's take, okay, the NFP affects the dollar most of the times, but what I want to do is, I mean, all the times, is let's take a look at outlook at the dollar and what's going on right now, and just talk about it. Now, the dollar outlook is weak for three reasons. As you probably know, okay, looking at the dollar in the past, let me show you. Let's open MetaTrader. Let's take a look at the US dollar in the past few days or few weeks. All right, euro versus the dollar. As you can see, let's make it bigger and put it on a daily chart. Right now, it's a daily chart of the euro versus the dollar. Okay, let's zoom out a little bit. Just a second, euro versus the dollar. So as you can see, okay, I put some lines here. We can take it down because it broke all resistance. Okay, as you can see, this is a daily chart. Each candle represents 1 day. A green candle means that the euro is getting stronger versus the dollar, and a red candle means the opposite, means in this specific day, the dollar got stronger. As you can see, the dollar is getting weaker for weeks already. You see, the euro is getting stronger because of many reasons in Europe, but I'm not going to go into that right now. Maybe on next webinar if we talk about the European Central Bank or so. But right now, as you can see, the euro is getting very stronger versus the US dollar, which means the US dollar is getting weaker. Take a look at the pound versus the dollar. You would see the same. The dollar is getting weaker. Take a look at the dollar versus the Japanese yen. You can see that the dollar is getting weaker. Again, you see? Here the US dollar is the major currency. So red candle means that the US dollar is getting weaker. So US dollar is getting weaker. Okay. Let me show you something else. The gold is getting stronger. Okay, we talked about it in past webinars, opposite correlation between gold and US dollar. And let's talk about the reasons. Okay, let's try to understand what we see in the market and why. So, where's the PowerPoint? There you go. Dollar outlook is weak for three reasons. Weak president, okay, as you probably know, Donald Trump is the president, okay, he's not able to push his health and tax reform, okay. When Donald Trump was elected, he talked about reducing taxes, okay, lowering the tax, which means big corporations and people, the Americans are going to have more money available, and to do some government spending, rebuild America, and so on. Now, he's not, and he wanted to cancel, and he needed to get the money from somewhere, because if you reduce tax, okay, which means the government are doing government spending, it's not good for the American debt, right? Okay, they're gonna have less money. The debt is gonna be bigger, right? Now, in order to fix that, he wanted to cancel the Obamacare. Okay, this is the health reform, but he wasn't able to do it because Donald Trump is not as strong in Congress as we thought he might be, which means right now, politically, Donald Trump is not able to do what he wants. He's not able to push the health reform and cancel the Obamacare. If you remember, Barack Obama, the last president of the United States, he had a health reform. I'm sorry, called the Obamacare, which means the government spent a lot of money in taking care of the Americans' social reform. Okay, and they did some actions in order to help, give some help and finance some of the insurances. Right now, what happens is that Donald Trump is really trying to cancel the Obamacare in order to lower taxes. Is not doing it pretty good so far. Now, fragile U.S. economy. State of Illinois, Chicago, for example, is a city in Illinois. First to go bankrupt in 80 years. Now, in Illinois, they have a lot of problems right now, a lot of debt to many other companies, people, and so on. They're gonna go bankrupt. Okay, it's the first time in 80 years that a state in the United States is going bankrupt, which means a bad sign for the U.S. economy. A lot of things going on these days, and the debt ceiling coming soon. Right, and this coming September. Okay, the debt ceiling of the United States is $20 trillion. Okay, we're talking about a lot of money, $20 trillion, and the question is, will Trump be able to push ceiling higher in September? Now, it happened to Barack Obama once, okay, that it almost hit $20 trillion, and he had to sweat a lot, okay, going to Congress and asking them, sorry, to take the ceiling, okay, we're talking about to push the ceiling higher. Now, back in the days, it worked for Barack Obama. Right now, we want to see if the president of the United States, Donald Trump, can do so. We're not sure. He's not so strong in Congress. He wasn't able to cancel the Obamacare. A lot of problems. Okay, in this coming September, if the ceiling, okay, if the $20 trillion, if the debt is going to be very high, more than 20 trillion, okay, we're talking about low taxes, big government spending, money is not coming in from anywhere. He didn't cancel the Obamacare, his health reform, a lot of risk, okay? And we might see the stock market and the US dollar crashing down this coming September. It's a possibility. I don't know politically what's going to happen yet, but right now what I'm doing is I'm giving you the outlook of the US dollar right now and why, as I said, it's weak. Dollar outlook is weak for three main reasons, and we mentioned these reasons, okay? It's very important for you before you go to any fundamental event to generally understand what's going on in the market right now and to understand the reason behind it. Okay. Now, weaker dollar. Let's go specifics. Euro versus the US dollar on a strong uptrend, right? Because the dollar is getting weaker. Okay, so the relations between the euro and the dollar are going up. The euro is getting stronger. Euro versus US dollar on a strong uptrend. It just broke 1.18 dollar per euro with an upside target of 1.2. Last webinar, we talked about it when we talked about the interest rate decision in the United States. We said that the next target is going to be 1.2. Okay, let's take a look at the market. Okay, let's open the euro versus the US dollar, for example. And you can see right now it's 1.1845, 46, right? You see this uptrend on the daily chart. Okay, the next level we're talking about 1.2, which is here. Okay, and we see if it's going to break this resistance right here, because it broke this resistance 1.15. Right now the euro is getting stronger and dollar is getting weaker because of the reasons that we talked about. Okay, back to the PowerPoint. So euro versus US dollar strong uptrend, broke 1.18 with an upside target of 120. Gold is trading around $1,270 an ounce because of weaker dollar. Okay, let me show you. We said when the dollar is getting weaker, gold is getting stronger. Okay, gold is kind of particle note for all currencies, especially the US dollar, which means every time the US dollar is getting weaker, okay, big money is buying gold. Let's put it daily. Okay, so we said the dollar is getting weaker, and as you can see, gold is getting stronger. Traded at around, you see, 1,269.70. Okay, these are the prices. A good NFP would be bad for the gold, and a bad NFP will be good for gold because of the opposite correlation with the US dollar. Okay, gold goes up, dollar goes down, gold goes up. Okay, as you can see. Great. Okay, in general, for you to know, dollar index is below 93, lowest since May 2016. Okay, so we're talking about over a year and 2 months. The highest, the lowest ever, the dollar index. Another thing for you to take a look at. Now, more downside momentum or recovery. This is the big question. This coming Friday at 12:30 GMT time. Okay, make sure you know if you're from London. I think it's going to be 1:30 your time or 2:30. Make sure. Okay, if it's GMT +1 or +2 or +3. But now the most important thing is, okay, is if we're gonna see, take a look. You're gonna take a look at the NFP number. You're gonna take a look at the average hourly earnings, and we're going to take a look at unemployment rate. Now, if these three numbers, okay, are going to be good in general, all right, so what do we expect? Now, the number of new jobs is expected to be 183. Right now, I saw 181,000. Okay, it changes a bit, but around 180 something thousand new jobs. Wage growth is expected to be 0.3%, which means if you take the average hourly earnings, we expect that this number, the average hourly earnings, to be higher by 0.3% than what it was last month. Okay, from last month to this month. Wage growth has been the tiebreaker in many of last NFPs, which means in general, as I told you, as you saw, unemployment rate, okay, we said was lower than 5%. We're talking about 4.3, 4.4%, which means full employment in the United States. More than 95% out of the people that can work are working, which is great. On the other hand, if NFP is going to be around 180,000, 190, 170,000 new payrolls, okay, which is not a great difference between what we expect and what we actually going to see. And then in the last few NFPs, okay, just remember the wage growth, the average hourly earnings was the tiebreaker for the US dollar. So pay very close attention to this. Trying to give you some tools to make you professional traders. A professional trader is someone that knows how to combine the technical analysis with the fundamental analysis, what I'm showing you right now, okay, and knows how to read this information correctly, okay, in order to take advantage of this, call it like buzz events, okay, events that make a lot of volatility, which means a lot of trading opportunities for you guys and for us. The dollar movement could be determined by the same number on the next report. All right, we good? All right. Now, a disappointing report could generate more downside momentum for the dollar, right? Right now, we have a downside momentum for the dollar is getting weaker. We said the three political reasons, the main reasons for that. Okay, we talked about it. A disappointing report will generate more downside momentum. A disappointing report could also affect the U.S. stock market and push it towards critical levels. Okay, so if you trade stocks, okay, in general, I recommend to diversify your portfolio, not put all the eggs in one basket, but split the risk. A disappointing report could also affect the US market, so pay attention and push it towards critical levels, even though when the NFP reports, the job reports are published, the US market is closed, but it's going to be open 1 hour later. So you can trade in two waves. First on US dollar, gold, US versus all majors, Euro versus US dollar, Great Britain pound versus the US dollar versus the Japanese yen, and so on. And then on the second wave, an hour later, on 1:30 GMT time, okay, as I said, make sure you see what it is on your local time. You can trade on the second wave, which means the US stock market, according to the NFP results. Okay? Good. Now, a good report could generate short-term support for the US dollar. Okay, we might see some recovery of the US dollar if we're going to have some good report, average hourly earnings better, more new payrolls, and a very low unemployment rate. So a good report could generate short-term support for the US dollar. Euro versus US dollar and gold seem to be the best position for strong opportunities, as we said. Okay? Pretty easy, right? Let's go on. And good luck. Okay, guys, any questions? I want to see if you have any questions, anything you didn't understand, you would like me to clarify. This is the time. All right. I don't know where you're from. If it's GMT plus 2, so we're talking about 2:30. All right. Okay, so as we said, US dollar, because of the political reasons, under a lot of pressure right now. This coming Friday, like every first Friday of the month, the NFP is a huge, huge event. Okay, take advantage of it. All right, you can take it. Don't forget to make a setup. Okay, of the chart itself and put some resistance and support levels. As we said, if you know how to combine the technical analysis with the fundamental analysis, make you a professional trader. Try to understand how high or how low on an hourly chart the price of the asset that you're trading on might get. All right. Okay, guys, any more questions, you're more than welcome to email me. I'm going to be this week, do some breaks, okay, talking about events that are going to take place starting tomorrow, okay, at 3 o'clock. I'm going to break into the our homepage on Facebook, okay, you guys. So on Facebook, you're going to see me. I'm going to break like a 2-3 minutes before any event, talk a little bit about the event, and then we're going to see the reaction together. Maybe on the NFP itself. Okay, on the NFP itself, 3-4 minutes before the NFP, I'm going to break on Facebook, break in. You can join me and we can see the reaction of the market and the results together. All right. Okay. If you don't have any more questions, more than welcome to join us on our next webinars through iTrader.com. Thank you very much for participating and see you next time. All right. Bye bye.